This week, Federal Reserve Chair Jerome Powell is expected to testify before both chambers of commerce. This comes as the Fed possibly considers another interest rate hike during its meeting next month. So for more analysis on this, I want to bring in Akane Otani. I hope I said your name right. She's a reporter for the Wall Street Journal. Akane, thanks for joining us. All right, so here we go. We are all sort of trying to read the tea leaves, looking in our crystal ball, trying to find out what's coming our way. Treasury Secretary Janet Yellen addressed America's fears over the economy during an appearance on ABC News. And she said that, a recession is not imminent and it's not inevitable. But how does this positivity align with what you're hearing from analysts?
Yeah, I would say the tone of her comments was definitely a little bit more optimistic than what we've been hearing elsewhere. The Wall Street Journal recently did a survey of economists that found they're estimating about a 44% of probability of recession sometime in the next 12 months, which is typically a level that we only see when we're either on the brink of a recession or actually in a recession. So that really tells you something about how pessimistic a lot of economists have gotten. And of course, when it comes to the consumer, we're hearing a lot more pessimism on that front as well. There was a University of Michigan survey of consumer sentiment that recently found consumer confidence actually falling to a record low. So definitely elsewhere, we're hearing a lot more sort of concern and fear about the direction that the economy is going.
Fed Chair Jerome Powell, he's very sensitive to how emotional the stock market can be, right? They were forecasting for a really long time that there was going to be an interest rate hike. It was months. And then right before the last hike, they sort of floated the balloon out there. Listen, it might be a little higher than you thought it was going to be. He gave everyone ample time to prepare for this, and yet we saw, major averages ending last week in the negative, with the S&P 500 posting its worst week since 2020. What is causing all of this? It's not like investors didn't know this was coming.
You're absolutely right, and the Fed's move was so well telegraphed that actually the initial reaction to that move, we saw stock averages end up much higher. So we saw this brief rally, and it made a lot of people think, oh, okay, maybe investors really have sort of come to terms with that, the direction that the Fed is going. But towards the end of the week, we did see the sell-off pick up steam again, and what we were hearing was a lot of fear among investors that actually maybe this Fed rate increase, the pace of the rate increases won't be enough to pull back inflation, and maybe we actually are headed towards a hard landing rather than the soft landing that the Fed is envisioning, where they're able to actually raise rates and slow down the economy, but not actually cause a recession. I think a lot of investors are starting to feel a bit more dubious that that scenario is likely to play out.
And of course, in order for there not to be a recession, or one of those casualties that often comes with the recession is layoffs. So we don't want to see that. This is based on a healthy unemployment rate. What are economists predicting about the unemployment rate as these interest rates rise?
I think even the most optimistic economists out there are saying it's sort of inevitable that at some point we're going to see the unemployment rate rise again. I mean, remember, we're operating off of an incredibly healthy labor market. The recovery from the pandemic was really remarkable, and we're seeing unemployment rate around multi-decade lows. So it's sort of inevitable that as the Fed continues to raise rates and cool down the pace of the economy, we are going to see that rate rise. Now, whether or not we're going to see the labor market actually weaken substantially, that's sort of up for debate. I think a lot of economists are still hoping that because the labor market is so tight right now, that perhaps in the second half of the year, we see a slight cooling of the economy, but not necessarily a sort of total crumbling apart. But again, we are expected to see the economy slow down, and that naturally will lead to employers hiring less and the unemployment rate ticking higher. So we'll just be really keeping a close eye on the pace of that slowdown.
All right, Akane Otani, thank you very much.
Thanks for having me.